Hey guys, for those of you who are joining us right now, Kylie is dialing it as we speak. And before we get started, I'm so excited to do our very first event for 2021, focus on Asian investment and fundraising trend. This is really exciting, like for our first event. So I'm super excited about that. Before we start to go into
Oh,
chatting with Kylie, I'm going to actually sort of quickly remind everybody our mission for Founders Hong Kong is really all about connecting Silicon Valley with Hong Kong. We're super excited the possibility about Hong Kong in terms of investment. We think that there's going to be so much more
yeah.
that we can do by connecting both worlds. So the mission is all about helping Hong Kong as a startup ecosystem to move forward. So I'm so excited to have all of you guys joining us today. Just as a reminder for today, we have Kylie and we have two very exciting events that's coming up in the next couple of weeks. On January 20th, we have a secret of building remarkable product with amazing product manager from Salesforce, Cloak, which is homegrown from Hong Kong, and also HomeCore to join us to share the experience as product manager. And then on February 2nd, we have Peter Cam from Sequoia Capital of Singapore going to join us. I heard from a rumor that they just made another investment in Hong Kong. I'm super excited about that. So with that, I am going to actually turn on my camera now.
Hello.
Hello, hey, Kylie, how are you?
Hey, I'm
Hey,
fantastic.
awesome, good to see you. Happy New Year.
Happy New Year to you too.
Awesome. So just for logistic, like in the next, I'm all about, be on time and stick to our agenda. So Kylie and I are going to have a conversation. So me interviewing him for the next, I think 35 minutes, 40 minutes or so. And then after that, I'm going to encourage everyone who's joining us to actually put your questions in the Q&A session. And I'm going to promote you guys to ask Kylie questions live. So I'm going to promote you so he can get to see you as well on video. You know what, Kylie, let's get right into it. And why don't we actually just go in and start with what is some of the most exciting investment trend or fundraising trends that you are seeing for 2021?
Okay, so thanks Edith for having me. I think for investment trends and fundraising trends, before I kind of dive into exactly what it is, maybe I'll give some context of the perspective that I'm taking here. So firstly, like investment trends and fundraising trends, very different for me. For 500 startups, we have a family of funds investing all around the world. So what we invest in depends on the region to region. And I'll speak to, since this is an Asia event and a Hong Kong event, I'll speak to what's very relevant to Southeast Asia, where I kind of focus on, and the general kind of Asian region as well. So that's what we invest in. Now, fundraising trends is what we believe people, the rest of the venture capital community wants to invest in. Hopefully what I do, like I would like to think that like what I do is not exactly the same thing. You don't want to be too different as well, right? If not, the things you invest in, like nobody else is going to invest in. So I mean, that's also an issue. So with that in mind, like there are three things that I think a lot about. And I call them stories. I don't think of them specifically as like sectors, like, oh, healthcare or edutech specifically. I don't look so micro as a sector yet. I start with like, what's the big story? To me, there are three big stories today, 2021. The first one is the evolving consumption story. What do I mean? I like to say the evolving consumption story is because you can quantify it. You can look at, say, Hong Kong, you can look at China, you can look at Japan, Korea, and you can get reliable statistics on what is the disposable income of the country, disposable income of specific sectors. What are they spending on transportation, household, travel, like very little, for example, or how much you spend on grocery, right? These are things that you can also map those audiences to customer acquisition channels, be it Facebook or Instagram, and choose those audiences. So you, from the get-go, you kind of can tune in to see who is spending on what and how is that story changing. All of a sudden, you can go one step deeper into the consumption story, and we can say that, oh, okay, maybe like Hong Kong or Indonesia, new parents. how are they changing the spending patterns the moment 2 million new parents this year? 2 million new parents whose babies are stuck in like work from home where both parents are there. And you know what I mean? So yeah, you can start to develop the stories and the trends. So entrepreneurs who actually pitch their startups, like immediately for our investment managers, we can see that, okay, well, this is bang on to this changing story of consumption. Okay, so that's consumption story, but I'll give a few more examples of the things that we think a lot about as it relates to consumption before moving on to the next story. Now, consumption as well, like a lot of consumption patterns, especially as it pertains to the internet, is influenced by the evolution of the customer acquisition channels themselves.
Yeah.
Of course, there are a lot of different exceptions, right? But you know, when Facebook first came around, those who actually figured out how to advertise well on Facebook really kind of was able to, or at least write the social graph, were able to build huge companies. Like Zynga, for example, they were like in tandem with the social graph, so they could get big real fast. But when Facebook decided, well, you know what, I think that, you know, we're going to change a couple of rules, right, related to the social graph, like, you know, then a lot of those companies could not have the same kind of customer acquisition dynamic. The same thing, like if you go further back in time for Google, when a lot of folks who understand pay-per-click and SEO, they managed to build huge companies resting on top of that. So fast forward to today, you know, like I've met some companies who really understood how to crack Instagram commerce at scale. And like they're doing up to $20-30 million revenue in 1.5 years. You know, it's very exciting. And I think with TikTok right now, it's also very, because they're new and they're aggressive, so the algorithms work very differently. So you can build a very fast audience. You know, I've got a friend who built 500,000 followers in 2.5 months, built up a ton of sales for a very expensive item. So I think that, again, like, without going too deep, I just want to stay on the surface to say, Edith, you asked me, what are the biggest trends I see? As, hey, let's look at the evolving consumption story. It's evolving very, very fast. Next is the productivity story. Now, this productivity story is like super fascinating to me because in the early days, like you see that whether or not you're like a large enterprise or whether or not you're a multinational corporation or a small micro SME or maybe a solo entrepreneur, e-commerce entrepreneur, you want to be more productive. You want to do things faster, make more sales, or get the job done, less cost. So you go HR tech, or you want to like maybe find like different ways to get analytics or try to automate repeat tasks. So the productivity story has led to like a whole world of software as a service. But the evolving productivity story is more interesting because more of us are, I mean, of course, there's a slew of digital adoption because of COVID, and a lot of decision makers in corporations and governments, you know, they're all like on like using mobile devices, like, you know, and so I think that with those kind of stories, you can almost predict and see that there's like massive adoption in specific things. And we can talk about Zoom, of course, everyone's using Zoom. It's a very general, easy story, but here's the crazy story. Apps want to be productive too. Apps themselves, and you know, they talk to other apps, okay? Like apps use a lot of different apps, right, to get the job done. So apps want to be productive too. They want to get the job done with less cost. So that if there's a lot of things that your app is doing and you don't want to do it anymore because you need to keep hiring like 20-30 developers on it, you want to find some other app that can do it. And you find this other app, then you can take those 20-30 developers and either, you know, get them to work on something else, or they may lose their jobs, I don't know, but probably not. So I think when apps want to be more productive, I think that's a whole theme that we're trying to look into in terms of the middleware and how apps talk to apps and which apps help. I want to just give you a quick story for a lot of folks on the call to understand this. I was on a panel once upon a time, and it was a very interesting panel because I was with somebody super senior at Toyota.
Okay.
And of course, like you can be exciting on a panel of someone who's like from a tech unicorn or whatever, but I was very excited about Toyota. I mean, they're like a very big and very old company. And so after the panel was over, I was asking him my questions, right? I want to know more about how Toyota excels. And he told me, he said, hey, the main reason why Toyota is able to last this long and to be able to kind of produce these cars at this scale is because we take care of an ecosystem of 5,000 other companies that help us get the job done. Any one of these companies, if they don't get the job done, our cars don't happen on time, or there's like some error or some leak or whatever, it's a problem. So we have a whole family of companies that we don't invest in, nothing to do with us. It's a whole supply chain. It's a whole ecosystem that comes together to make Toyota what it is.
Yeah.
Whoa, that is cool, right? So, but apps is the same thing. Like those of you who use Grab, like just checking, verifying your identity alone. They're like there's multiple apps they use to do that, right? So of course, again, I'm going to go too deep into the productivity story. We have a limited amount of time today, but the last story I want to tell you is what I call the big money story. Super excited about this. Why is that? I mean, it sounds like big money. That's cool, but there are there are a lot of problems which are worth so much money, and they're like not solved at all. But it's like a crazy amount of money. But the money is not seen as like, wow, that's this amount of money that we can take. It's not as simple like that. It's more like, if we don't fix this now, it's gonna cost us so much money. It's gonna destroy us.
Yep.
So these kind of like big money problems, right? Sometimes it happens very far away, and then it gets closer and closer, and suddenly you spend money. So I'm gonna give you a personal story. Then I'll give you the actual. I'll tell you exactly what I mean. So personal stories like this. Let's say, for example, you have a health scare, right? You just realize that, since we're like talking about. Yeah, listen, we talk about Hong Kong over here, right? You take you hear, cancer is like a big deal, and then you take a Prenetics Circle DNA test in Hong Kong. Okay, then yeah, all right. So we're investors in Circle DNA, and Danny's great, it's a good friend. And so let's say you take that test. Let's tell the story about Danny, right? So he took his test, and he found out that he's got a high likelihood of a specific kind of cancer. So he's like, oh damn! Like if I don't fix this now, it's gonna cost me everything. And as a result, he's like getting a gym, he's eating healthy, he's like eating more plant-based, he's like, zenning out, he's like changing his whole life. So for Danny, his consumption pattern completely changed because he says, what if I get cancer? There's a huge, big money problem, right? So I think that the biggest money problems we have today isn't so much something you want to spend now, but something that is going to cost you a lot of money if you don't fix it. And the moment it gets near enough, boom, you're going to spend. Governments. Okay, governments have printed a lot of money in the past 12 months. Tons. All governments, not just the US or whatever, a lot of money, right? And you're stimulating the economy, and you want the economy to continue working in a state of a lockdown. But there are other bigger problems than that. Like even at this moment, just yesterday, like because 500, we've got colleagues all around the world in many locations, and they're reporting crazy weather. So they're like, wow, it doesn't snow in Texas, and suddenly it's snowing in Texas. And then like another friend in Taiwan, it says it's one of the coldest, So the weather patterns around the world are getting more and more erratic. Climate change, back then it used to be like, it's debatable, but right now I think like, some people, I tend to believe that it's totally happening. And so climate change, like how is that really going to affect it's like a big money problem. When it comes near enough, a lot of spending patterns will change, and a lot of changes have already happened over there. So when you talk about climate change, a lot of funds, a lot of governments, like this shift has already happened in terms of how the money is shifting. We talk about say palm oil. We talk about Asia, right? A lot of Asia has a lot of commodities, right? We talk about palm oil. Last year, Europe had new standards of like ethical supply of palm oil. And then all of a sudden, there were these new standards that made it very difficult for a lot of buyers to buy from Indonesian palm oil and Malaysian palm oil. Suddenly, those countries, like a whole chunk of their GDP is in threat. A lot of very influential and powerful families, a lot of the revenue is suddenly in question because of that changes, right? So again, like Europe and a lot of leading ESG practices and all that, it has a huge trickle-down effect. And the moment it hits, a lot of different money is going to be spent. So I can go on and on about this. We talk about food, right? Food security, food safety. Now because of COVID, it made people more aware about these threats which are coming. So I'm going to stop and kind of signpost over here and say, look, Edith, you asked me like investment trends. I say that the three perspectives on investments we think about: the evolving consumption story, the evolving productivity story, and the evolving big money story, which are some of these threats that make seismic shifts. All of these three things are powerful perspectives for me because you can map it to quantitative economic data. They map to a lot of econometric models, and you can very quickly size up whether the startup that you're trying to build is a large enough market size to start with.
Yep. Yeah, it's exciting. Khailee, you're very, in terms of like super macro, in terms of what you're looking at, and very, very exciting three trends. You mentioned, you invested in Pernetics. That's That's awesome. We all love Danny. At the same time, I just want to put things in perspective, right?
Sure.
500 billion now is fund 2. Is that correct? How big is the current fund now?
Yeah, so maybe like I'll kind of build out like the fun story. So we in Southeast Asia, we actually have like different vehicles, right?
Yep.
And these vehicles we invest in Hong Kong, but we also have a lot of main funds out of San Francisco also investing in Hong Kong. So I think 500 has a long history of investing in Hong Kong from the earliest days of Ray, with 9gag, all the way in between, like dozens of startups, all the way to Danny of Prenetics, and and we've got like Asia Biome, right, with Jonathan, and we've got a lot of very cool companies there. And the funds that invest in it, we have a few. 500 Durians is our family of Southeast Asia funds. So that group manages a bit close to $100 right now, and we've got multiple funds. And so for like we cut up 100K on the seed stage, and then after that we can double down up to $2 million. And then in San Francisco we've got Fund 5 can cut up to $5 million onto like a Series A kind of stage. But we also have like an earlier stage as well, which is a global accelerator, which is completely virtualized. So that is up to 250K. And that kind of virtual accelerator program comes with programming, and it comes with like now a very virtual program and a very virtual demo day. Right. Which shockingly, I have to tell you this, Edith, like it's crazy. The first time we did our virtual demo day, we have like investors come, right? Yep. So normally we try to pack a hall. So the biggest hall we can get, right? We fit like about 500 people, kind of curate. We don't want any kind of random people in there. We curate the list. We've got about 500 people in that hall. So now we get people traveling from all around the world to come to this virtual demo day. We got 1,700 investments. It's 1,700 VCs and investors, all vetted, right, to curate the active cut checks. Yeah. So we get them to join, and then we create a Slack group for all of them to interact and discuss the deals of the graduates from that program.
You're right.
And then they follow up, and then they invest. So we got record engagement with investors and a lot of investments into the virtual startups because of this virtual program. So we feel the virtual program is more successful. We're doing it more rolling. So in summary, like to your question, to your kind of like question about funds, we have like the Global Virtual Accelerator program. Yep. We have our seed checks coming from Southeast Asia. We got our post-seed checks, and we got our Series A onwards checks, all the way to 250K, 500K, $2 million, up to $5 million. And here's the cool thing. We have a SPV mechanic that we do for companies who are performing well. One of our companies who's very active and very famous in Hong Kong as well, Carousell. Yeah. We're first investors in Carousell. During the Series C, when Sequoia and Rakuten were part of that round, we spun up an SPV to give the company more money. In 6 weeks, we were able to raise $21.2 million for the company. The founders didn't have to run around and fundraise very much. We brought the investors to them. $21.2 million in 6 weeks for an SPV. So in other words, for any kind of startup founders who engage 500 startups today, you can have like a family of funds to actually support you all the way from your idea stage or your kind of first product stage all the way to like a later stage where the check sizes can get as big as 20. This year with some SPVs, hopefully we can even beat the 20 mark. One day, I hope we can cut $100 million check into some of you as well. So
that's exciting.
Forward to that.
So for the audience, who literally we have people from all over the world joining us today, including some folks from the US, to put things into perspective, right? So Khailee, you and your team focus on Southeast Asia. Southeast Asia is actually just the population of Southeast Asia is double the size of the US population. It's like 655 million. And Southeast Asia actually mean a lot of many countries. Is that 11 countries from Malaysia to Philippines to Indonesia to Singapore? There's so many countries that make up about 8.5% of the world population. So Khailee, when you and your team, particularly for Durian, like do you usually focus most of your energy in Indonesia or Malaysia where you're at? How should we look at this if I'm not from South?
No, I think that's a great question. Especially I think for a lot of Hong Kong entrepreneurs as well. Like we got some portfolio companies like Shopline and all that who expand into Southeast Asia. So we have a lot of Hong Kong entrepreneurs like Danny from Prenetics and Circle DNA. They're all over Southeast Asia from the get-go. So I think that's an important perspective. So those of you who are trying to grapple Southeast Asia, the simple way to understand it is this. Yes, it's got more population than double the population of US, but check this out. It has more mobile shoppers than the US. People buying on phones more
Mhm.
than the US. It's top, so in terms of like acquiring customers very quickly, of course, like the spending power is a little bit different.
Yep.
But it's also, yeah, but eventually, like there'll be way more consumers on it. But here's the simple way to look at Southeast Asia. I would say you have to look at cities. So not so much like countries, but you have to look at cities. And you want to look at cities like, say, Jakarta, where you've got like the greater Jakarta city, you got about 20 million people. And then, I feel like Jakarta definitely, which is very broadly and generally speaking, Indonesia is where close to 300 million of that population is. So Jakarta is the one with like the most mass.
Yep.
That being said, is because of the spending power of Jakarta, you have to kind of have more stamina and more money in the bank to really crack Indonesia over the long haul. Whereas there are some, I wouldn't call them easier cities, but Malaysia is like smaller, but their spending power is pretty good. There's a big Chinese speaking population there. So for WeChat, for Tencent, their first WeChat payment country outside of China was actually in Malaysia to kind of test things out a little bit, so kind of soft and easy kind of landing pad. Singapore, of course, is where a lot of the global VCs and regional VCs have their offices over there. So I think it's to use Singapore also as a place to fundraise from. And then in terms of like programming talent, Vietnam is the only place that doesn't complain about programming talent. So if you're kind of hiring, building a programming base over there, like Vietnam is a good place. So again, like each country has like its unique features. So you kind of want to look at the cities that you kind of like choose. Okay, what does your startup need? You want to build more engineering? Okay, let's set up camp in Vietnam. Oh, we want to kind of like fundraise and be more visible a bit more. Okay, let's set up camp in Singapore. Okay, we want to kind of like build and experiment with some markets. Okay, let's try Malaysia a little bit. It says, okay, we want to just really plant the flag in the biggest battleground. Let's go straight into Indonesia and get going with it. So I think that's like one way to really think about it. So we don't have to think of all 11 countries per se, but you're trying to find your starting point. But eventually you want to definitely not leave out Indonesia.
Got it. And then, last year I was so pleasantly surprised to see, like the top 10 companies that raised the most money in the world, Grab, Gojek, are like some of the top companies that raised over Grab, I think like over 800 million, and Gojek did 1.2 billion. Those are huge round, right? So yeah. And then, Khailee, even though you mentioned with Carousell, you guys are dabbling into Series B and C. What do you see like in terms of fundraising in Southeast Asia? What's the average raise like in terms of, is valuation getting more and more expensive, and what do a typical like seed round or like an A round look like in terms of dollar raise these days?
Yeah. So that landscape's changed somewhat. Okay, so before COVID hit, well, let's talk numbers. 2019, venture capital firms, a lot like with dry powder, they've raised the money and they can cut checks for Southeast Asia. There was a little bit, I think $2 billion. I kind of forget the exact number. That was ready to cut checks, and most of that is between Series A, B, and C.
Yep.
So so throughout COVID, like those checks were actively cut as well. So the Series A round sizes, they can go as big as like from a smaller size, maybe like 2 million, 3 million. Like that's a bit more rare. Like some of the Series A can go up to 5, and some of them can get a bit larger. It's not abnormal to see seed rounds of $2 million US, one plus, Wow. That being said though, is that, and this happens all around the world, there's a lot of founders sometimes come to things with a bit of ego, and they're like, they call their Series A round the seed round. And then so that way it's like, oh, I got this massive seed round, I got the biggest seed round. And then there are a lot of like pre-seed round, and then like angel round. So the naming changes, right? And because the names start to drift forward, ego-driven kind of thing, it's kind of hard to really kind of like grok that, right? So, but what I will say is this, is that I think for a lot of entrepreneurs, like the main thing I care a lot about is not to follow fundraising trends so much. So I'll give you a metaphor, a story, okay, and then like I'll tell you why. So let's talk about movies. If you watch Avengers or any of like blockbuster hits, right? Look at their budgets to make that film: $160 million, box office $240 million, right? So you don't even make 2x. You spend 160, maybe you make 240.
Right.
And then you got some of these sleeper hits, like what's that? Key and Peele, Jordan, okay, I forgot his name, but like Get Out or others, it's like smaller films, and their budget's like 6 million, but the box office like 200 million. Right. So which one do you want to invest in? Do you want to say that you invested in the Avengers, or you want to say you invested in Get Out? Now the thing is, you invested in Get Out, and people are like, oh, okay, well, good on you. I haven't watched it. I don't know. Maybe some people don't see that. Even Crazy Rich Asians, since we're talking to Hong Kong folks over here, right? Crazy Rich Asians, the budget, I forgot what it was 18 million or something, but they grossed like close to 200 million. I forget the exact numbers, right? But something of that range. So you would rather invest in Crazy Rich Asians instead of like Avengers if you're a financial investor. But if you're like a ego investor, an optical investor, you want to say that you invested in Avengers. They're like, wow, you access to Avengers, good on you, right? So I think that like entrepreneurs who chase like fundraising trends, like, we're very early investors in Grab, we're investors in big blockbuster hits like Bukalapak, Carousell's close to $1 billion valuation now. And, so I've got a ton of blockbusters, very proud of it. We're kind of lucky, fortunate, and that entrepreneurs want us to invest in that way. I mean, just give you a number there. 500 now is 20 unicorns in this global portfolio. The portfolio has matured from one new unicorn every 16 weeks to one unicorn every 8 weeks. And last year, 2020, we had one new unicorn every 5 weeks.
Wow.
And so we're very lucky. But when we look at the data, some of the unicorns which actually raised the least money, that's what we're looking for. The most beautiful unicorns are those who actually raise the least money to get there. From a financial standpoint, right? So I just put that out there. Like, raising a lot of money means you just get diluted more, right? It's entrepreneur, right? So just remember that, right? Yeah. Don't raise too much money to get to where you want to be.
So Khailee, like, let's say I am, working on something that within sort of your main three themes that you mentioned, from consumption, big money, to productivities. So now I'm coming to pitch you. Let's say I'm not doing a 2 million, not a big round. Let's say I'm just raising 500K to $1 million. When I come pitch you, what do you look for, like in a founder? Let's say it's come from, a good intro, and I am from Hong Kong, but I want to go after Southeast Asia. And a lot of the Hong Kong entrepreneurs usually will go after, if it goes to Southeast Asia, will be like Taiwan or Singapore first. What do you look for, like, in terms of in a founder?
Okay. Well, I think if you look at founder and founders, right? Okay, we start with that. I mean, we'll put the idea aside and put the market, put the story aside, right? Let's talk about founders specifically. I haven't been a venture capitalist for that long. Okay, I just want to preface this. So I began in 2014. 2013, right? So it's about 7 years, give or take.
Yep.
But in a short amount of time, I discovered a couple of things. The first one is about founder elasticity. So what do I mean? Elasticity symbolizes stretch. So we talk about elasticity, like, can a founder change? Can like learn and become a new person, right? So can the founder like start with a certain identity, but identity is not so fixed, right? It's become malleable, and they can kind of evolve through time. So I've seen some of my best founders, they begin a certain way. They're like, oh, I'm a very good product person, not so good at finance, and then later on, it's like they're like super good at finance. They're like better than all their bankers, right? So that's elasticity. So you start as a founder with a certain identity set, but because it's so elastic, you kind of stretch and consume a broader range of identities as you grow, right? So to actually find and actually detect elasticity in the history of a founder is one of the ways that I try to see whether or not a founder is like elastic going forward. Now, the second thing is the action rate of the founder.
Yeah.
So I'll give you a real example, right? And Edith, like you're such an active investor as well. Like you've seen this, like maybe we do a session with a founder and we talk about, wow, maybe these are a couple of things you want to try. That like, yeah, let's try some of these things. Then if let's say that you reach and you touch base with a founder in 2 weeks or 4 weeks, and they out of the 8 things that they were interested in, they either A, haven't executed on any of them, or like B, only executed on 1 or 2 things. Then you're like, are they really tenacious? Or 2 weeks later, you talk to the founder, they talked about 8 things, but they've executed like 28 things. It's like the rate of execution is so fast. And even in one conversation, you see them take out the phone, okay, I just texted my CTO, it's like the execution rate and the iteration rate is like so quick, right? So if you got a fast action dynamic, like the speed of execution is really fast, I think that's a very good signal. Now, I think the third and last thing, and of course, many things we can talk about, but the third and last thing I see is about the co-founder dynamic. So, and I learned some very quick lessons because the first startups that I began investing in 2013, 2014, the first to fail had nothing to do with competition, had nothing to do with fundraising. It's founder breakup.
Okay.
The first 2 to 3 companies that kind of like didn't make it in my portfolio was because the founders kept fighting. And these are signs that you can see, right? Of course, sometimes you only meet one of the founders, right? But as part of diligence, you want to meet the whole founding team and you want to interview them at the same time. So you could have like an extroverted founder like myself who can't seem to stop talking, but the extroverted founders also want to be able to include like the other kind of like personalities of the other founders to say, hey, what do you think? What do you think, right? And so I'll give an example. So the Bukalapak founders, right, who built this beautiful marketplace unicorn in Indonesia. I was just on a call with them yesterday, and so Zaki is a very extroverted founder. Sinuk, their CTO, is highly introverted. And Zaki, sometimes when I'll like ask the question, Zaki will say, Sinuk, what do you think? Like before he answers, he's gonna give Sinuk. And we just chill for a while. Then Sinuk he takes a bit of time, like a pause 2-3 seconds, and Sinuk will lay his thoughts out, right? Then sometimes Zaki will talk, but he'll stop and say, okay, Sinuk, I stop here. Sinuk, what's your perspective? Then we wait, we get it. So he's kind of like over time learned, like they're best friends. They know how to work with the dynamic. This is a very simple example, right? But again, how do we tune into like the co-founder dynamic so you're a team? You're like a founding team. That's more and more important, especially as the years go by. I can keep going, but I think these 3 things in a founder is very easy to pick out, and they are quite highly correlated to how big the company gets.
Yeah, make complete sense. So Khailee, where are you now? Physically?
I'm in Kuala Lumpur.
Okay, so I'm assuming, well, we're all at least I'm in San Francisco right now. We're still stuck at home and we've been stuck for a long time. And I don't know what situation in Malaysia now, but how's COVID?
I turned off my virtual background. Like I'm just in my room. Yeah, that other office the other background was just like the background of our Kuala Lumpur office, which I miss very much, but yeah, there we go.
All good. So on that note, I thought you were in a really sweet office in Malaysia, but obviously not. But in this case, I'm guessing like at least in Hong Kong, a lot of folks are still sort of on and off working from office and at home, and I'm sure that you get asked all the time, how's COVID impact sort of your rate in terms of investment or the way that you do diligence? You have to meet everybody, and sometimes you do customer call. So in this case, it's all remote now. How's that COVID impact you, and do you foresee that will continue for 2021?
Okay, so 3 things. First thing is that I think a lot more about risk than ever before. It doesn't impact like what do I mean about risk, right? But as a portfolio, because as an investor, I look at things from a portfolio, not just company by company. Yep. But I want to make sure that my portfolio, I don't have too much in one sector. I don't have too much in another sector. So for example, I'll just give you another example. I had a friend of mine who branched out and set up his new VC, and it was very everyone's very happy for him and cheering him on. He went really strong with travel tech as like a core component of his portfolio. Travel tech. He made a travel tech report and everything. And so then when COVID happened, it's a risk to the portfolio if you got too much travel tech, right? Yep. So for 500, generally speaking, is that we try to look at portfolio sector diversification, because you don't have all your money in one sector. you don't have too much money in one sector either. Like fintech is hot or whatever is hot. You don't have too much money in fintech, for example. So we try to balance like the sectors so that in case there are any kind of market shocks, that's like not a thing. The second thing is that we think about balancing our portfolio by region. So you don't want to, for us investing in Southeast Asia and greater Southeast, like the surrounding Southeast Asia, we invest a bit in Pakistan, we invest in Hong Kong, we invest in Taiwan, but we only have like 20% of our companies in non-core Southeast Asia. And in the rest of Southeast Asia, we invest in Malaysia, Singapore, and Indonesia, with a bigger emphasis on Indonesia and Singapore, and a slightly bigger emphasis. And we try to invest in companies that have regional footprint. So why did this matter during COVID? When COVID hit, it hit different countries in different ways. So at a different moment, Singapore is totally cool, no more lockdown, but say Malaysia and Indonesia lockdown. Then suddenly like Malaysia's cool. Then, then later now, like recently, like Malaysia's going into a lockdown again, that Indonesia's getting like more serious, and then like Singapore's like, cool. So you want to have like your portfolio and your startups to be able to have exposure that's a bit more broad and not overly concentrated. So that's our perspective now. We think about risk, and then sometimes we may not invest in a startup, not because the startup's not good, but we have to have the discipline to say, hey, we have too many of this certain type of company in this certain market, and we don't want to have too much of that, right? So we're trying to balance the portfolio. In terms of rate of investment, our rate of investment had been the same.
Okay.
In terms of diligence, like we've always been quite comfortable in investing in companies virtually. And because our check sizes are generally we don't really like maybe half the time we tend to be a larger part of a round, but sometimes we're not, right? So we don't want to be too annoying and diligence too deeply, but also because a lot of seed checks is buying options, right, for our larger followers. Yep. So we make some pretty fast decisions sometimes, especially if we already know what we're looking for. We got like a crosshair, and then like startup come right across, we pull the trigger fast, right? So hence, we have not slowed down on investing. But however, like we've been paying more attention to just risk overall.
Got it. I see. So maybe I have a few more like logistic and sort of question in terms of how you guys invest, and then I'm going to open up for Q&A for the rest of the audience to ask you questions. Okay. Khailee, do you prefer to lead and follow in terms of?
So when we first began, we prefer to follow. These days that we kind of co-lead, co-follow, it's getting a bit blur because like the person who leads is the one, like you can say the person cut the biggest check, biggest part of the round, set and dictate the terms, but it's very strange, right? Because we get a lot of entrepreneurs who come to us to say, hey, we got a lot of investors who are interested, but they're waiting for an institutional VC, or they're waiting for a big brand, or they're waiting for someone to decide the terms. So our check may not be the biggest part of the round, but sometimes our check is the most part of the round. So once we make a commitment to a certain set of terms, suddenly boom, 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 everyone joins in. So it's like, so in a way, it's like we find ourselves in a position that we almost have to negotiate all the terms and it's like we're leading, but without the biggest check. Sometimes because like the things that we want to invest in is so strange. For example, deep tech, right? We were so big on deep tech, and we can of course talk about what we mean by deep tech in 2018. But investors were still like, focused on a lot of other like e-commerce marketplace, which we still did, right? But nobody else wanted to invest in us at that stage. And so we are the only ones. So we have no choice but to lead. So the short answer is that I want to get the job done. I want the right founders to get the right money, and we're going to do whatever it takes to make sure that happens, right? And if we have to lead, you know what, we're going to go ahead and we're going to do that. Ideally collaborate with a lot of other VCs, and we try to give them as much support as we can. And a lot of times the support's like, we can come from many VCs, you just get better odds, right?
Yeah.
Generally speaking.
And do you usually take board seat, and do you have a minimum equity ownership requirement?
We don't take boards. We actively do not take board seats. So we want to have what I call a WhatsApp seat, like a chat seat. Like I just want to make sure that like the founder knows that they can just chat and just give us a call our phone whenever it is, rather than wait for a certain cadence. Also, we don't want to overburden a startup with governance until it's absolutely needed later, right? Yeah. So we don't. In terms of minimum equity ownership, like we have a target ownership that we care about. Like these, we try to get towards 10%, and we want to have a path towards 10%. Ideally, if we can get towards 20%, then I think we're coming in the right stage. But there are a lot of different scenarios that we're as little as 1% and 2%, and that's fine too.
Got it. I see. So I have a couple more questions, and then we're going to open up for a question. And the first, actually, Sam is going to ask question. He will be out of, and also a 500 founder. If you have to pick, and I know they're all your babies, which one will be your favorite portfolio companies of all time?
Wow. Okay. Okay. I'll give like okay. I'll give a few perspectives, right? So I tend to like founders who are just genuinely authentic, open, and good people, right? And they're super competent as well. So you've got the super duper competent. They're like business sharks. They get the job done, but you know they're coming from a good place. Never a moment in their bone that they're gonna make a decision which will hurt a lot of people, be unethical, or like deliver a lot of decisions in an asshole manner, right? So I love non-assholes. I love like good founders from that standpoint, right? And then so I love Kita Bisa in Indonesia. The founders like Timmy and Vikra, they were actually like non-profit social workers, and they realized a lot of the social issues like requires a lot of money to be solved. So they came into entrepreneurship because they want to solve the bigger structural issue of providing Indonesia social support, right? Yep. And they believe that if you rely too much on the government or outside parties to give the support, it will not be enough and it'll be too slow. So they wanted people to help people. So they launched like Kita Bisa as a, it's like in the US, there's GoFundMe. It's like social crowdfunding. Yep. So during COVID, they had individual people, average ticket size $10 US, okay, donating $500,000 a day for COVID relief through COVID.
Amazing.
And Kita Bisa has launched social insurance. So people who can't afford traditional, don't understand or have an aversion to social insurance, you can kind of pool to peer-to-peer insurance. They and that company, like we seeded them, we came in a second time, co-invested, we brought in Go Ventures to invest in them, and then they're like a big company now, like a big company. But the founders, they lead with their hearts. And they're like heartfelt, they're thoughtful and super duper competent, and their company is changing the nation. So I think that's like a beautiful story. So I really care about founders who are genuinely good people.
I love it. I love this example. So now we're going to open up for Q&A, and our first person who's going to ask question is going to be Sam Wong.
Hello.
Sam is the founder CEO of Event Extra, also a 500 company. Hey, Sam, how are you?
Hey, what's up, man?
Thanks, Edith and Caroline. Thanks for the sharing, very informative. Cool. So actually my question is more related to Southeast Asia. Maybe give you a little background with what we do. We provide a platform for event platform that specialize serving the Asia physical and virtual events. And so we were doing, especially because of COVID, we expand pretty well in Southeast Asia. So we did quite some event, the largest one in Singapore, Philippines, and Indonesia, all those countries. And so we speed it quite up last year because of the COVID. So my question is more related to choosing the investor, like the characteristic. You guys are choosing the founders. And on the other side, we are thinking, because we are raising the next round, and then we already get quite some term sheets, and now it's thinking about how to pick the investor really can help, especially Southeast Asia, because you are the expert there. So because my biggest thought is what characteristic or what's the maybe historical incident you've seen that the characteristic of the investor actually really speed up the Southeast Asia growth. So that's my question.
So I guess if I can understand your question differently, it'd be which investors like can accelerate the progress of a founder in Southeast Asia the most? Like what kind of characteristics of those venture capital firms or investors can really help the founders the most in Southeast Asia, right?
Yeah, exactly.
Okay, so here's the model. Here's the way to look at it. You want to look at your startup first, not the investor first. You want to look at your own startup first. And there are two things. One is that what are your biggest gaps, right? And secondly, what is your biggest growth drivers? So I'll give you an example, right? Yours is an event company, but if say some of the startups here, they're like say in insurtech or something that requires interface with government relations, and that's the biggest gap. They want to find the investor with the deepest government relations in the key markets they're in.
Yep.
I mean, if that's what they need, right? So either your biggest gap or your biggest growth driver is more or less sometimes the same thing, right? And then so you find the VC that will fill in that gap right now at your stage. So for you, as you expand in Southeast Asia, you're looking at events. So maybe you want to have the biggest events, right? To be your customers. And who can accelerate getting a few of those landmark events? So then you can really make a list of the biggest events, biggest virtual events in each of the markets you care about. You talk about Philippines, Malaysia, Indonesia, Singapore. You make a list. There's probably like top 100 events. It's like how prestigious, everybody knows them, they're amazing. Some of them are big events by brand, but not by audience. You pick out 100 of the best events. You segment all the events out to say that, wow, these are the groups of events. One of them is tech events, let's say, okay, or maybe some of them is expos, right? Where it's trade shows, right?
Yeah, trade shows.
So then you start grouping up, trade shows, right? So you start seeing the trade shows and you start seeing, looking at, okay. Then suddenly you have a framework to interview your VCs. And you say that, hey, so when you talk to VCs, hey, do you know anyone in the trade show organization in Malaysia? Can you introduce me to them? I was trying to get in touch with this person. Can you help me? You know, and maybe before the deal is done, they boom, they pop some intros, right? They make it happen. So the same lens I gave you about the action rate, how quickly, like I've been tested by founders, man. Like I was like courting one founder who like as a unicorn founder built a unicorn. Like he has specific homework for all the VCs. So it's like I do all of his homework, you know what I mean? And then like so I think you want to like do it like that, especially when you have a lot of leverage, right? But again, I'm just giving you a framework to think, right? But so those are more immediate and timely manners. But of course, there's a broader context to choosing investors as well. And the best thing you can do is talk to other founders. If you see like let's say you have term sheets from VC A, B, and C, and you look at some of you look at the website and you look at the portfolio companies. Then you ask, hey, can I speak to one of your founders? Can I speak to this founder of this company? And then you do a bit of due diligence yourself, and then you kind of interview the portfolio companies, and then I think you'll get an intuitive sense. So not just tactical, but more just like broadly in the relationship, and then you'll know.
Yeah, I think that's so precise. And thanks. Finally, it's also good to see you. I just finished the business mastery from Tony, like last night.
No, you're wearing the shirt over there. Yeah, Candy Yao, kind of rallying all of us together.
Right, exactly. We're attending like same classes, so I think Andy introduced us on WhatsApp earlier. So it's good to finally we meet.
Yeah. Oh, there you go. Nobody is so familiar. Well, good to meet you, man.
Yeah?
Good to folks in the fam.
Okay,
well, we time for some other questions. Yeah, so let's catch up offline.
Thank you.
Awesome.
No, thank you. Some great questions.
Yeah, thanks.
So on that note, sorry, we have Thrush.
Oh yeah. Hey there. Didn't expect to be on video. How's it going, guys?
Hey, what happened to your hair?
Oh man, barbershop started closing here, and then I have no one to impress anymore, so this starts happening too.
I think it's pretty impressive.
Oh wow, thanks, man. Appreciate it. I see you kind of grew your.
I used to perm. No, I used to perm my hair to look like you. Yeah.
Oh, nice, man. This is totally non-intentional, but I appreciate it. Thanks for taking my question. I really appreciate the time. I'm going to be pretty fast here. So relatively new founder here, just working on getting my own personal app up and running here. We're called Hopscotch. Effectively, what we're trying to do is trying to solve the problem of ordering a drink at a bar. Just as simple as crowded bar. What if you can order it off your phone? That's really all it is to it. Very similar to ordering at Starbucks. So we have this within development right now. It should be coming out pretty close to the end of next month. But the question I have for you is when coming to scale as a new founder, and if we need to get to the point where we are seeking more investment, or really any investment, because it's just been out of pocket at this point, as a potential investor, what is one thing that you can impart onto a founder? What is one thing that you're really looking for, aside from you come in with passion, come in studied? What is something that really speaks to you?
Okay, so if you have a conversation with an investor, the investor walked away with learning some things, I think that's like you scored a bunch of points, right? So for example, I think your space that you're tackling is actually quite interesting because it's a pervasive problem trying to get drinks at a bar. And of course, like now in a COVID season, like I guess like I don't know how you want to translate that story, but basically it says, what about your business is so fundamentally important and game changing that not many people know about? For example, let's say in terms of like ordering drinks from a bar, maybe there's a supply side issue. I know like Edith, I think back then in the early days of 500, we invested in a bar type company called Bartender, I believe it's called, where they help bars prevent theft. The biggest issue for a lot of bars at the time that we learned was that there's a lot of theft of alcohol. So the bartender just kind of like, after hours, you know what I mean? And so, or refill some of the bottles. They actually pour out the actual alcohol and put something else in and put it back on the shelf and so on and so forth. And so like they had an app you kind of level, like you just kind of like stock check, like how much stock is left after a night. And so it's kind of like a supply side issue, right? So, and it's so pervasive because it makes or breaks whether a bar is going to succeed or not. It's how much theft you can prevent. So you see, like suddenly, like let's say I'm interviewing bartender, I'm like, wow, I didn't know that. That's crazy, right? And then like you start to see how pervasive the problem is, and you see how easy it is, what a big impact, and how much bars are willing to pay, how many bars actually exist. Maybe a lot of small bars are owned by some big bars, or maybe the biggest influencer is the alcohol companies themselves. There's like a world. It's like some CSI Miami thing going on, or I don't know. It's like some Netflix explained. It's like if I talk to you and I felt like I just watched like a 15-minute, like a 2-hour documentary about bars, like condensed into 5 to 10 minutes, and I learned so much, and that learning happens to equate of the big money opportunity, I think that you scored.
Okay.
So in a lot of ways, like I think a lot of founders like sometimes you don't want to allow the VC or to interrogate to lead so much in terms of asking the questions. You're like, hey, if it's okay, let me tell you a thing or two, not about the business I'm building, but the pervasive structure of why it's such a big problem, why it's such an opportunity, right? So, and you kind of like preface a little bit. Let me take about like 5 to 10 minutes. Let me tell you the story about bars, right? Let me tell you the story about like ordering drinks at bars. You know what I mean? And then you kind of like, at least you build some space, right? So in your early conversations, you just want the investor to learn a thing or two that makes it relevant, that it's like a very big opportunity. I think that's a kind of like a very strong brownie point, if you will. 100 brownie
Thank
points.
you. That was super helpful. Thank you so much for your time.
Awesome.
All right, you're very welcome, Suraj. Like, rock on.
Thanks, man.
I have the exact same guitar behind your head, by the way. The Traveler.
By the way, we have two more questions from the audience, but I do want to add on one thing, Khailee, you said earlier about when, for a hot deal, you want to assign particular tasks for different investors to do. Only if, because, founder and investor relation is like dating, only if you are a hot deal.
Yeah.
Founder making me to do all kind of work, but I'm like, I'm not even interested in investing into what are you doing?
Absolutely. Absolutely.
Anyway.
Yeah, and even and also it's interesting because it's also like the way the homework is assigned is like it cannot seem like, hey, I've got homework for all of you. You know what I mean? It's not like that, right? It's like it's very, you know what I mean? It's like a bit of a skill. Hey, can you help this? You know what I mean? Do you know anyone here? And they just kind of like see if they want to be helpful. It's up to them, right? The choice is theirs, right? So
totally.
No, but you're right. Like it's you have to be the top 0.1% of super hot, right? Yeah.
Yeah. All right, Quincy, thank you for joining us. What's your question and what do you do? And you are on. Oh, awesome.
Hey guys. Hey.
Hello.
Edith, well, like I said in the chat before, like love your new starter, like the way that you sum up startups in a few words is amazing. Khailee, thanks for being here. I'm actually a startup in Taiwan right now. I come from Hong Kong. I'm in AppWorks right now. Just quick question. What's the perspective on startups that are built to market demands versus startups that are built to experiment and explore different sort of combination? Because you mentioned like productivity tech, and in productivity tools, they often have to streamline a lot of workflow process and to automate stuff that people don't usually have before. And that's why they have values, right? And they see things that normal people don't see it. That's why they can make you more productive. So they're kind of like instilling some sort of notion into you that works with their theory. So this kind of tools like Rome research, like people have never done it before. Like, what's your point of view on that? Like versus like, because most of VCs nowadays, they're investing stuff that are almost like hitting product market fit, or having some sort of traction, or even at least to have a clear problem solution. But when you see it, something like Rome research is rather philosophical and artistic, isn't it?
Yeah. Okay. No, thanks for that. Are you building a productivity tool right now? Can you see?
Yeah. We are building a tool to capture what you're reading and processing, and then you can share it to others. So imagine if you can subscribe to others' reading list and learn from them directly. Let's say you're reading Bill Gates' notes and highlights every day, see what he's reading. So you can learn much faster. That's what we're doing.
Okay, no, I like it. That's actually very interesting. So I'm a super early beta tester of a lot of things. Like when Notion was first launched, I'm like using it and chatting with the founder. Back then, Hackpad, before then and definitely Rome is my primary note taking, so I'm hooked on Rome, completely transformed the way I think. And so I'm super duper hooked. Like every day I use Rome, every day, every meeting, everything Rome. And prior to that, I struggled with Evernote and everything else. So I'm kind of like, I understand what you're saying as well. Also so your question was related to showing off some product market fit versus like trying to build something experimental, right?
Right.
So I think that like they're actually the same thing at a different timestamp. So things which are experimental and fundamentally very philosophical, experimental, very nuanced, but not many people get it and not many people use it. That's just like pre-product market fit, right? But once they're like, you got like 2,000 paying customers, that's product market fit, and it no longer feels experimental. It almost becomes a little bit more obvious. So the cliche of like, oh, the future is already here, just not evenly distributed yet, thing, you just along the same continuum. That being said, is that, and this is for later, but I think a lot of startups get hooked into the product market fit, and sometimes they feel that they've maxed out like of the number or type of customers they can hit. So for example, Rome is a little bit nerdy, like and good thing they have gamification, otherwise they're like too ugly for most people to use. And so sometimes you may hit a certain point where your product market fit becomes, you held captive to that product market fit you have, and then you need to be more experimental all over again, right? So you got these micro kind of like phases of a product. So that's the journey. You just need to be financed long enough for the investors who want to invest in the experiment, or your own money to experiment, hit the product market fit, and you work with investors there, and then the investors have to be agile with you enough to kind of go through the next phase and the next phase. Is that helpful for you, or you had a different question?
Well, do you think it's an education process for VCs as well, like to support companies like Rome in early stage? Because Rome, the founder lived in a fan to work on this product and wait for sometimes 6 years ago, and then now they finally got the traction and all that stuff. But if they got helped in the first place.
I have a friend who is cracking a huge problem related to forests, and without going into too much detail and revealing what it is that he quit his Wall Street job and worked on it for 12 years. Okay. Wow. 10 years. Every year he's like, I think I gotta quit. But the wife keeps saying that, no, it's okay. Just keep going. At year 10, finally he cracked it, and they're doing about $25 million a year right now in revenues. No outside, I'm mad about the investment structure and all that, but it's a 12-year-old company, but you only crack it at year 10. I don't think I've met many founders who actually do such a thing, but they believe in what they're trying to build so much that they're willing to go through it for 10 years. And the wife and the support system also believe in it so much that they follow through with it. I've got another founder in our portfolio at 500 called Red Doors, right? They build like some people compare them to Oyo, but kicking ass. The whole family moved from like an expat job in Singapore, and then they moved to Indonesia, and they had to, the wife had to go start work again. The kids have to go out of international school. The whole family believe in the founder vision, and stick true with it, and then the company is very successful right now and really tied through COVID very well. So again, I want to give you and the rest of the founders a few of these stories, because it's rare to find a founder who like fundamentally wants to build something that they believe is good and they're right, that a lot of people share that belief. And they're willing to actually stay on and to see it through and make that happen. Very rare, right? A lot of times now, a lot of founders, they say, oh, VCs don't want to invest in it. Okay, I quit. Let me try and build something else, right? And that's okay too, right? It's just a different way of approaching innovation, and that's fine, right? But if you really believe in what you're doing and how it's going to scale, your job is not to need to educate VCs or educate customers. The moment you need to educate people, it means customer acquisition costs. Your product should not need any education. And your customers should be educating other customers. In fact, like I find myself educating people on Roam all the time. I'm telling people, hey, Roam is totally different. You have to try it. Like it does like this. I'm like a Roam evangelist, and I've been using Notion and a lot of other things for a while. And I still use Notion at work, but do you know what I mean? So you want to get product to be so beautiful, a point where no education is needed, customer acquisition cost is automatic. It's a very ideal state, but I just want to plant those seeds in your mind. Otherwise, you may be stuck trying to educate things for a bit too long.
Yeah. So thank you for your questions, and we actually Quincy, thank you. And Khailee, we have a couple more questions. Is that okay? We stick around for another.
Sure. Well, yeah, I will stick around. Let's keep going. I need to open my calendar to see I'm not like bumping somebody else. Yeah, we're good. We're good. I can do another like 10 minutes if that's okay.
All right. So we'll rapid fire. Thanks you, Quincy. Take care in Taiwan.
Yeah, I'll try to answer more succinctly. Okay, see you soon.
All right, next we have Pratik. Am I saying you?
Hi, can you guys hear me? Sorry, I'm on the road, so can you guys hear me?
Yep, we can hear you
loud and clear.
Super
all right, yeah.
Yep.
All right, yeah, I'll keep it quick. Thanks so much. I love the story-based narrative there. My question is really about exits. So I'm an LP in a couple of VCs, and I'm an entrepreneur myself. And my question is, from your perspective, what are some of your favorite exits in Southeast Asia? And are there one or two that you're looking forward to in 2021?
Okay, so I mean, right now in 2021, I think the trend, or rather the trend that everyone's looking at is around exits to SPACs. So if you follow the number of US SPACs that have been launched for looking for Southeast Asian assets, that's the place to look, right? So naturally, a lot of unicorns who have come of age, pick your pick. All of them are all options for all of these SPACs. So that's as much as I can say because we're exposed to quite a lot of these unicorns. So US-led SPACs looking for Southeast Asian assets is publicly observable enough. And so that will almost become like a spectator sport, right? So that's something to quickly tune into. In terms of like favorite exits in the past, like I really like the inter-portfolio exits. Like as investors in Grab, like we had Grab buy another one of our portfolio companies, Kudo, for $100 million US. That was a very quick gain. And so a lot of that is also kind of like happening. I think in terms of favorite exits, like I think that is kind of cool when you see you can portfolio really banding together to become a larger company, and I think more of that's going to be happening.
Awesome. Thank you so much. Thanks, Edith.
Yep. Thank you, Prantak.
Thanks for your question.
Last but not least, we have Daniel, which is asking more fintech related question.
Okay.
Okay. Now I've become a Zoom master. All right.
Yeah. Master of ceremonies.
Okay, Daniel should be joining us. Daniel,
hello,
can
Daniel. Loud and clear, my friend.
Good morning, guys. Just listening to you guys for the past 1 hour, so inspiring. I'm from Singapore, and I'm trying to build a platform for supply chain finance and trade finance. But the whole idea is I'm not doing financing. So basically, my platform is kind of an aggregator for corporates, larger corporates, multinationals, to onboard their distributors or even their suppliers onto my platform. and
Yep.
are then able to offer them financing or even financial services as well. So there are a lot of
Yep.
data that will be
Yep.
flowing through this platform on both sides. So my question today is,
Yep.
because we are looking for funding and looking for VCs as well, we've read up some of the profiles of the VCs, but how do we really choose a VC that shares the same passion as us of what we want to do in terms of our direction? Because there are a lot of VCs in the market, but some of them are doing different kind of things. Some of them are in finance and so on. So how do we really identify the ones that can really help us and understand what we do?
Okay, so Daniel, so I'm gonna to answer your question, I'll change hats, right? So I was an entrepreneur before I became a VC, and so I've raised money from VCs at a time where the ecosystem was quite different, right? And successfully raised and very happy about it, and successfully exited 2 companies. And in that process, I learned a couple of things about dealing with VCs. The second data point I want to share with you is that in our first fund, we had 120 companies, 500 durians, 120 companies, 70% of our companies, and I think the stat is more now, have raised money, and we are very proactive in helping them introduce VCs and coaching them to this process. So I've kind of have a bit of a shortcut first principle for you, and for any founder who's raising money, is that you want to have as many conversations with as many VCs as possible. And you don't want to be selective at the beginning. You just want to talk to a lot of them. Why?
Okay.
It's because you are training yourself. It isn't somebody else's job. It isn't somebody else's job to be interested in you or to be passionate about your company or to know about why your company is awesome or to it's not their job. It's kind of like your job. And
Yep.
and also everything that you read and know about them online, it's very difficult to actually know what they think about now, right? Because this is such a fast moving environment. So, and sometimes they may say, oh, we invest in this, and they look at that, but then the moment you share with them what you do in a way that makes sense to them, they'll be like, wow, they may change their minds and just want to invest in you. And so,
right.
So the first thing is you have as many conversations as possible, and then you're always tweaking how you actually share your company. So you're finding that pitch VC fit. Right? In a way, right? So
Yep.
you know the angle to explain, right? Now then the final so that's very have as many conversations as possible. And it's your number 2 is your job to share it with them to ignite their passion. Now the last thing I'll say is people express passion very differently. Some of the venture capital, some of my peers in the industry, there are many entrepreneurs, different shapes and sizes, and also the same thing with VCs. Some investors, they express their passion like poker face. They're super passionate, but the face is the same. Having a bad day, the face is the same, right? So it doesn't mean they're not passionate. Yep. That's their face, and that's a really good face if you're playing poker or being a VC, right? But for me, right. I'm passionate about everything. So I've got some founders that give me some feedback. Hey, I thought you were so interested in talking to us. I'm like, yeah, I'm really interested. It's just I'm not interested. And so they don't know if I'm actually interested or not because I'm always excited, right? Do you know what I mean? So it's
totally.
So yeah, you know what I mean. So just go with it, man. You go with it and really tweak your story and have as many conversations as many investors as possible, and don't be picky. Right? Just go until you have 6 term sheets on the table. Don't need to be too picky, right? Go and get those term sheets.
Yep. Great advice.
Thank you so much.
Thank you, Daniel, for asking questions. And I'm going to put you back to our attendee list. Khailee, thank you so much for your amazing advice. I love your energy and you always get everybody super excited. But now I know you don't have poker face. So just because that's not equal to that you're going to invest in my company. All right.
No, that's why I don't play poker. It's not good for me.
I can't wait to play poker with you and Ron and everybody else. So have that said, I have a final question for you, and that will be end of this. Just a couple of advice for Hong Kong as an ecosystem. How can we improve?
Oh, okay. Well, I don't okay. That's a big question, but I think geopolitically, every country and its people have a role to participate more in building solutions. So it's very easy to participate in like calling out a problem. And that's what most people do. And I'm not saying that that's like a low value item, I mean, that's like valuable in its own way. But a lot of the founders and investors who are on the call, whether or not you're LP in a fund, or whether or not you're like VC, or whether you're an angel investor or you're a founder, like all of us are part of the value chain of solution making, right? So to actually like really spend time to think about what solutions to be made, like we're assembling a portfolio of solutions for any given country. We are assembling an army of solutionists for any problem.
Yeah.
And to spend the mental effort to read up, to have conversations, to really try to think deeply of what really matters, like this is our job to do, right? And if it's easy enough to kind of like follow some trend, oh, Pinduoduo, oh, what a great IPO, let me look for a of like Hong Kong or whatever, of Southeast Asia or whatever. I mean, like that's like valuable work as well. But like maybe there are other things we can solve too. And that's why, like early on, just looping back to the start, it's like it's easy enough to follow a consumption story or productivity story and look for the trends inside those stories. But the big money story, like if you can fix something that can help Hong Kong as a nation of people really have what they want in a systemic fashion, that is amazing. Because not only Hong Kong, but any country has problems ahead of it that once it hits, it's going to cost everyone a lot, right? So if all of us can really tune in how to solve these things together, whether it's income disparity, whether it's things related to climate, whether or not it's things related to mental health and well-being, general kind of like health, self-care is the new healthcare. That's what I tell people. This goes on. There are a lot of big money problems. Tune into those. Let's work on it together. And you will not only change the world, you're going to make a lot of money as well. And I think that's like a very, very good way to operate.
Well said. With that said, Khailee, I can't wait to see you in person. Where is it going to be? Either in Malaysia or Hong Kong, but hopefully we will back to normal soon. But thank you so much for taking the time today. We love it.
No, thank you. No, thanks for having me. Always good jamming with you.
I can't.
Thanks all the founders as well. Great questions.
Yeah, thank you all the founders for participating. It's an awesome session. Can't wait to jam next in person.
Yeah, I mean, I'm up for doing a lot of these stuff. So I hope a lot of those folks who like these insights, like I'm publishing a lot of videos of these talks, Financial Times, Asian Development Bank, like just opinions on larger macro trends. If you like macro and how it relates to startup, like I've got a ton of content. Look for me on YouTube, on my website, khailee.com. So I've got lists of like public speaking excerpts and stuff like that. You can check some of these things out, hopefully to be publishing more content for all of you as well. So thanks so much, Edith, for this opportunity.
Okay. Bye.
Okay, bye everybody. Bye-bye.
Bye.